Welcome to the look ahead for Wednesday, the 15th of November, with me, Fiona Sincotta, Senior Market Analyst at City Index. So, on the earnings calendar, we'll be watching out for some figures from Tencent, Oracle, Cisco, Target, and JD. On the economic calendar, Chinese data will be in focus. We've got industrial production, which is expected to come in at 4.4% year on year. That's down slightly from 4.5%. Also, China retail sales are expected to rise 7%. That's up from 5.5% year on year. Now, these data points will be very much in focus, particularly given that data from China recently has been weaker than expected, raising concerns that more stimulus measures may be needed in order to maintain the economic recovery in the world's second largest economy. Just the other week, we saw that inflation in China fell 0.1%, so actually into deflation. Also, the PMIs, manufacturing PMI, dropped into contraction. Data points basically highlighting the fragility of the economic recovery in China. So if we do see some strength in these numbers, that could be some good news for market sentiment. Moving on, we've also got UK inflation data. Now that's expected to cool to 4.8% from 6.7% year on year. Now, UK inflation is expected to cool quite significantly, owing to a drop in the Ofgem, that's the UK energy regulator's price cap, in October, which could see inflation expected to feed through to much lower inflation. And it means that Prime Minister Rishi Sunak is on course to achieve his aim of halving inflation by the end of the year. He needs it to come in below 5%, and that looks like it's going to be achieved. Now, this data comes after today's jobs report. Now, it was a mixed bag. We saw that the vacancies fell by 43,000 in the third quarter, suggesting that there's some weakness is coming into the labour market. But at the same time, total wage growth was much stronger than expected at 7.9%, down from 8.1% previously, but much above the 7.3% that was expected, which does add inflationary pressure. So it's something the Bank of England are going to be keeping an eye on. Now, if we just have a look at what's been going on with the pound US dollar, now we can see here we've had this really strong move higher in cable. This is actually quite a lot to do with US inflation data rather than the pound reacting to the jobs data, although we did see a slight move higher after that. But I'll come back to US inflation. It did come in softer than expected, fueling bets that the Fed is at peak rates. Now, the pound US dollar, we can see from this chart, it recovered from the low of 122 around the 20 SMA at the end of last week. It's powered higher, rising above the 50 SMA and that 200 moving average. And I think a close above that level will be really significant. We haven't seen the pound trade above the 200 daily moving average since around early September. Now, if we do move convincingly above there, and 125, that's the level that we're just testing right now, then we can see a move above the 50 SMA there at 125.20. On the downside, support, I think we'll be looking at around 123.40. That's the October high. A break below there could see the 50 SMA come into play around the 122.60 level. So yes, talking about US inflation, that was the data that came out today that was really moved the markets. It came in at 3.2%, so lower than the 3.3% that was expected, and well below 3.7% that we saw year on year in September. On a monthly basis, inflation stalled at 0%, and core inflation also fell to 4%. So the data is really showing that consumer prices in the US are back on that trajectory of cooling, which has the market assuming that the Federal Reserve has reached peak rates and won't be raising interest rates much or any further. Obviously, I think it's too early still to say that with any sense of definite certainty, but the market seems pretty convinced. Now, the data that we have tomorrow will be US PPI, so that's the wholesale inflation, which is expected to rise 0.1% month on month. That's up, down, from 0.5% month on month in September. Retail sales are also going to be in focus. Now, let's not forget how resilient the US consumer has been over, despite this aggressive hiking cycle that we've seen from the Federal Reserve. So we'll be looking to see, expectations are actually for some weakness to come into retail sales. Are expected to fall by 0.3%, and that's after climbing 0.7% month on month previously. So just having a look here at the equity markets, the S&P, we've seen a really strong move higher across the three main indices in the US. This is the S&P, as I said. Just looking at the chart, we can see that it's recovered from that low just at the end of October of 41,000, risen above the 200 SMA, the 50 SMA and the 100, and also that falling trend line dating back to late July. The price has also pushed over several important key resistance levels, including 4,400 and 4,450, aiming for that 45 level. The 45.40 level, and that's the September high. If we can get above that, then 4600 is in focus. As far as support's concerned, I think that that 4400, that's the October high. That's also the falling trend line support and the 100 SMA, as well as being a round number. So that could prove quite a tough nut to crack on the way down. Thank you very much for watching. If you liked what you've seen, then please do press like. And if you'd like to receive more videos like this, then do subscribe. Thanks for your time. Catch you tomorrow.